the result of these tariffs, we'll see about 1 million barrels a day of supply impacted, about half in Canada and half in Mexico. And what that will do is it will steepen the differential or the discount that the pricing that producers receive in both Canada and Mexico. And that, if these tariffs are sustained in place for a period of not just a few weeks, but potentially months and even years, could start to impact the drilling activity in both of those countries. And so up to about 1 million barrels a day of supply is at risk. And so that's perhaps been the most immediate reaction we've seen from markets. It's important to also just recognize here, though, that there's scope for a broader series of trade wars does weigh on the demand outlook, particularly towards the second half of the year. And OPEC now is a very tricky balancing act to manage all of this all the way through.
Indeed. So let's just quickly touch on what OPEC is going to do in response here. It's unlikely, at least according to analysts that I've been speaking to, that Saudi Arabia will respond directly to Trump's call to try and lower prices by increasing supply. So if we saw OPEC deciding to essentially extend these production cuts as expected, how long is it going to be able to sustain this strategy without losing market share to non-OPEC suppliers?
Well, first of all, something very important to realize is these tariffs actually play directly into the hands of OPEC and give them a stronger hand, because not the disruption to the Canadian and Mexican crude, it happens to also be the heavier sour crudes, which if you're looking for where's the substitute that the United States is going to get for its complex refining processes, it needs to actually get from OPEC plus. And so in a way, this strengthens OPEC hand, but we are seeing this increased pressure from Trump, and there's a lot more pressure than's being publicly acknowledged going on behind the scenes, tying in even to, that meeting with Netanyahu you spoke about earlier, and the link to the Abraham Accords and the security guarantees that can be applied within the Middle East. So we do expect that what we will see here is, combined with the fact that the market's also in quite strong backwardation, right, which also supports OPEC's position, is I think this all makes it almost an inevitability that OPEC will proceed with its planned unwind of cuts from the second quarter, which is an unwind that they've up until now been delaying month on month. And so we will start to see the unwind of those cuts. But to come to the crux of your question, the real issue here is if the demand outlook deteriorates further and OPEC starts unwinding its cuts in the second quarter, it's a question if they can sustain the continued unwinding of those cuts through to the end of the year, or if they're going to start to get cold feet. What I think we will see from OPEC is they will start to release more supply. They will say it was all according to the plan, but in truth, it's going to be because of Trump's pressure. But they're going to try and do this just to cap spikes in prices because of the impact of these tariffs, because of the risk of Iranian crude from sanctions coming off the market. They don't really want to see crude plunge to the $50s or $60 a barrel, which is something that Trump would probably prefer from an economic standpoint. And that's why OPEC is going to say they're keeping to the plan, but they're going to be very hesitant to do anything which is still going to collapse oil prices in the second half of the year.